Terra saga rumbles on. Welcome to the Daily Forkast May 17th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. Kwon's latest proposal for the Terra blockchain involves a hard fork and ditching the stablecoin UST. But will the community go for it? Meanwhile, in an exclusive interview, Singapore's sovereign wealth fund Temasek told Forkast that contrary to reports from last year, it doesn't own Bitcoin, but it is getting ready for tokenized assets. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with more on the fallout from the UST and Luna crash. In South Korea, the fiasco is weighing heavily on play-to-earn projects and their tokens. Local gaming giant Kwon saw the price of its play-to-earn cryptocurrency C2X plunge from around $2 to 82 cents by Tuesday morning in Asia, following the depegging of UST. The blockchain gaming project is on the Terra mainnet, and C2X says it has now decided to switch to an alternative which has yet to be revealed. Meanwhile, the South Korean financial services firm NH Investment and Securities has lowered its target price for Kwon holdings from around $137 to around $98. It said that the Terra Luna debacle has cast uncertainties over the play-to-earn business. South Korean gaming developer Netmarble's MBX coin, which has no affiliation to UST or Terra, had fallen from over $50 on May 6th to less than $9 by Tuesday morning. Fellow developer WeMade's play-to-earn currency has also experienced heavy price fluctuations, though that turbulence was apparent before Terra's troubles began. Share prices for all three companies have fallen over the past 7 days, with Kwon down 10%, WeMade down 4%, and Netmarble down over 17% Tuesday morning in Asia. Meanwhile, Terraform Labs co-founder and CEO Kwon has come up with a new plan for a path forward for Terra. In a series of tweets early morning Tuesday Asia time, Kwon confirmed proposing a hard fork of the Terra blockchain in his Terra Ecosystem Revival 2, which will abandon the algorithmic stablecoin UST. Under the proposal, the network will be forked, with the original chain being called Terra Classic, with the Luna Classic token, and the new one taking the name Terra and its native token Luna. Kwon's proposal is reminiscent of the 2016 Genesis DAO exploit, which led to the birth of the current Ethereum chain. He said that they believe this token distribution is the best solution for the varying interests and time preferences of each stakeholder group. He also said it creates the most viable path to revive the Terra ecosystem. But some UST holders clapped back at the proposal, saying that they lost their funds in the crash and urging Terraform Labs to address the issue. The hard fork will go live for community voting tomorrow, May 18th, Asia time. You can find those stories and a whole lot more at Forkast.News. Luna, the cryptocurrency powering the stablecoin Terra USD or UST, was trading at over $80 just 10 days ago, and it's now been reduced to a fraction of a penny. So what's really happened here, and what lies ahead for Luna and UST? Benjamin Stanley, Business Development and Sales Director at Matrixport, joins in to talk about just that. It's great to have you again with us, Benjamin.
Thank you for having me.
Let's start with the basics on Terra USD and the Luna. The UST, it's an algorithmic stablecoin. What exactly does that mean? How does it work? How is it different from other stablecoins like Circle and Tether?
Well, let's talk first about the collateralized stablecoins because they're a bit easier to understand. The two most popular you mentioned are USDC and USDT, and together they have a market cap of around 130 billion. So there's clearly demand for those. The way it works is very simple. The issuing entity says we've got liquid assets worth the equivalent of $1 on balance sheet for every stablecoin that we issue, and you can come to us at any time and exchange your coin for $1 in fiat. Now there's a decentralized version of this as well, and they're using crypto assets, but in essence the logic is the same. Every coin is backed by assets on the balance sheet. Now, the other version is the algo stablecoins, and they're a bit different. They're backed by the promise to be able to exchange one stablecoin for the dollar equivalent value of another crypto. And in the case of UST, that was Luna.
Well, UST is theoretically supposed to be worth $1 each. So how did it lose that dollar peg, and where does Luna fit into this? And what's led to Luna's value collapsing?
Basically, you're always allowed to exchange UST for the dollar equivalent value of one Luna. And there's the catch, because that creates a twofold problem. First, the Luna that you receive when you exchange UST is being minted out of thin air, and it thereby increases inflation, and so the value of every other Luna goes down a bit, just because the network didn't get more valuable by just increasing the supply of Luna. Then, of course, you want a dollar, so you didn't want a Luna in the first place. So you're going out to the open market most likely and selling that dollar equivalent of Luna for fiat. Now, that mechanism works both ways. So on the way up, people have to buy Luna to mint UST, and that's pushing the price higher. Whereas on the way down, the inverse happens. The second problem is, however, a bigger one, because there's a bottleneck for these swap transitions that happen on-chain. And this is where the peg broke. Something caused stress to the system. Then people saw that they couldn't convert the UST into Luna fast enough, and so they went to centralized exchanges to sell their UST. The price for UST started to drop, which caused even more stress. Then panic happened, and then that created that death spiral.
The Luna Foundation guy, the organization that supposedly supports Luna, said that they would step in with Bitcoin reserves. Yet we've seen that USD dollar peg crumbling.
Yes, that's right. So obviously what's happening, and that risk of a death spiral was very well known to the Luna Foundation guard. They were aware of this, and so what they've tried to build a Bitcoin reserve in order to prevent that death spiral. The logic was that either you can convert the UST into the dollar equivalent of Bitcoin, or they would use the treasury to defend the peg off-chain. Now, that Bitcoin conversion wasn't ready yet, but even if, what we witnessed was that the pressure was just too large, and once panic broke. At the peak, we had about 2 billion of UST outstanding, and that was backed by just less than 2 billion of BTC.
And there have also been allegations that Citadel, BlackRock, and Gemini are behind the UST collapse. Your thoughts?
I personally doubt any of the aforementioned TradFi players was involved. I think Gemini even came out openly and denied any allegations. But that doesn't mean that there was no centralized actor behind it. They withdrew liquidity from the 3 pool on a decentralized liquidity pool that made it very vulnerable, the system at that point. And therefore, what could have also happened is that people just saw that, panicked, and then that cascaded down into causing more and more panic and created that self-reinforcing mechanism. So while there's speculation, and I believe there might have been a centralized actor behind it, even that's not fully known yet. Whether it was a centralized actor or it was just a breakdown of the system because of panic doesn't really matter, because if it was a centralized actor, somebody would have come out and exploited that trade, just like what George Soros did with the Bank of England. So it's in a way, it was a flaw in that system, and that just got exploited.
We still have so many questions, and there's so much more to discuss, but for today, we'll leave it here. Thank you so much, Benjamin, for joining us.
Thank you very much.
And finally, Temasek is an investment firm owned by the Singapore government that manages a net portfolio worth $273 billion. The sovereign wealth fund has shown significant interest in investing in the blockchain and crypto space, leading a $200 million funding round in crypto firm Amber Group back in February. It was also reportedly buying Bitcoin last year, but in an exclusive interview with Forkast's editor-in-chief Angie Lau in Singapore, Pradyumna Agarwal, managing director for blockchain investment at Temasek, said that's not the case.
So it is one of those misinformations which we have chosen not to comment on, because I don't think it was part of the mainstream media. We don't comment on our direct investing activities. We are very focused on backing the best projects. That's really where we are spending a lot of our time and activity. Today, Temasek does not own Bitcoin, since you asked me this very pointed question. But that is not a statement on whether we like Bitcoin or whether we want to own Bitcoin or not. I mean, that is just a factual statement of fact for where we are today. Where we are very, very focused is looking at which are the emerging protocols, where is the utility.
Yeah.
That is central to all of our activities.
But part of that is tokenization, and a lot of protocols don't have equity. They raise through tokens. So de facto you are, or your funds, owning crypto in some of these protocols. Is that, that's within your realm?
So Temasek has a flexible mandate. We can gain exposure or seek to gain exposure to areas which we think are of interest to us and will deliver appropriate risk-adjusted returns. So yes, it's within our mandate to be able to own tokens, but to be able to own and hold and act on tokens, you need a completely different set of infrastructure.
Yeah, I mean, you don't want to necessarily be in the treasury management space.
One is that. Second is there is a new set of risks that comes with owning this new form factor.
Right.
And therefore, we are getting ready in terms of being able to deal with tokenized assets. But I would say it will need some time to make sure that it meets our operating risk requirements and that we can do it at scale.
And that's the Daily Forecast. And if you want a deeper dive on these stories, the Daily Forkast newsletter can be delivered straight to your inbox. So sign up at Forkast.News/newsletter. Thanks for watching. I'm Forkast Megha Chaddah. Until next time.